Hello everyone, West Mirchawala here, your tutor of Advanced Taxation Practice to Pass session. 5 day session, Practice to Pass. Let me tell you something about myself first, and then we will start discussion about the session. Okay, myself West Mirchawala, uh, and I will be conducting this Advanced Taxation Practice to Pass session. I'm affiliated with Mirchawala Hub of Accountancy, gold approved learning provider in Karachi, and I have been teaching this paper since like more than 25 attempts, and 5 of my students have secured nationwide positions. Okay, so this was a brief knowledge about myself. Uh, let's start some discussion about that how the session will go on and what we'll cover and how we can increase our chances of passing in this exam. Okay. Now, as the name of the session shows that it's practice to pass. So the major aim of the session will be focused on practicing some past papers and practicing some good areas along with discussion of exam technique, that how we have to go through the things in this last month. Like as you know, that November has started and it's like less than 30 days to exam. So what should be our approach towards the exam and how we should prepare it? If a student asks me that, sir, with your experience, why do the students fail in this exam? What is the reason of the failure? So my always advice to my students is that for advanced taxation, there are 2 elements to pass the exam. In order to pass advanced taxation, there are 2 elements. One is knowledge of rules. You need to learn rules. One head is knowledge of rules. You need to learn rules, which is, I think, easier part. You can easily learn out the rules. That's not a difficult part. The other part is exam practice. Now, this is where the students create trouble in advanced tax. Like they lack in exam practice. Now, major reason of this fact is, major reason of lack of exam practice is a fact that in advanced taxation, you cannot practice complete past papers from the ACCA website. Because on ACCA website, the past papers available get outdated due to updation of the Finance Act. So what the students do is that they simply practice the exam kit. When you practice the exam kit, you can do the topical practice. You can have knowledge of the topics, but in exam kit, you can never have knowledge of the complete exam paper. You can never understand that how you have to deal with the complete past paper. Okay, so exam practice, 2 things. One is topical practice. One is the topical practice, which you do from your exam kit. And one is complete paper practice. Now, major reason of failure of students is that they don't do this complete paper practice. They don't do this complete paper practice. And why they don't do this complete paper practice? Because the complete past papers available on ACCA website get outdated due to updation of Finance Act. So they just do topical practice from where? From the exam kit. They just do topical paper practice from the exam kit. You learn a particular topic, you revise a particular topic, then you do the past papers of that topic. Believe me, they will always be easy. But when you practice this complete paper, then only you will be able to identify that what are your areas of lackness. What are the areas where you are lacking? So the basic purpose, the basic aim of these 5-day sessions is, the basic aim of these 5-day session is that we will go through some complete papers. We will do some complete past papers, like we will do complete past papers of 5 attempts. Okay, 4 or 5 attempts, so that you can understand that how you have to deal with a complete past paper and you can understand it. Okay, obviously we will revise rules also. We will do revision of rules. but alongside we will do complete papers of at least 4-5 attempts, whatever the time limit permits, and we'll try to cover as much as possible within these 5 days. Like these are 15 hours, and we'll try to cover them as much as possible. The basic purpose of this session is that I want you people to give a direction of study. I want you all to take a direction of the study. Like after these 5 days, you should have a direction of study, that how you should take up your studies in these last 25 days. Okay, my advice for direction of study is, like if someone asks me that, sir, what should be my direction of study should be? So my advice is take 10 days and revise rules. Take out 10 days and revise all rules. Okay? Don't try to make yourself expert in the rules. Just revise rules, you should have a reasonable grip. And then what you should do? The second step will be that you should do attempt-wise papers. Now, what are attempt-wise papers? Attempt-wise papers, again, which I said earlier, you should do some complete papers and you should revise rules along with that. Revise rules along with that. Okay? Like, if I tell you my approach, okay? Now, that, for example, how we'll be taking through this session is that I will open these summaries and text rate sheet in front of you. Okay, this summaries and text rate sheet will be available in front of you. The text rates are obviously the obvious thing you will get in the exam, but the summary notes, you will have these summary notes. You will have these summary notes. You can access them in the handouts portion of the session. You will have these summary notes, you can access them. Now, what is the use of these summary notes? All the rules of advanced taxation, are summarized in these summaries. Like these are 45 pages summaries of entire advanced taxation. ATX rules, 45 pages. Sorry. These are 45 pages summaries of all rules of advanced taxation. Like all the rules are written here. You can go through them, all the rules are written, and you have these summaries handout in your handout portion, and ACCA have also emailed you. ACCA have also emailed you to the registered candidates. If you have registered today, now at the time of the session, you will obviously get the handout at the end of the session. Now, this summary note, I will say, it's a lifesaver. What you have to do is that you have to take out 10 days, take 10 days and revise all the rules. Take 10 days and revise all the rules. Then what you have to do? You have to do attempt-wise papers, complete papers, revise rules along with that, use summaries, and in my opinion, you will be good to go. Look, I'll say this thing again. Obviously, I cannot prepare you completely in these 15 hours. Advanced tax course is more than 200 hours. I cannot prepare you completely in this 15-hour session, but I can give you a direction. And believe me, this is my experience of more than 25 attempts. And I'm saying you on the basis that 5 of my students have scored nationwide positions, and I know that what is the difference between a student who fails and a student who goes for a distinction. What you need to understand is that you need to develop a study pattern. You need to study in the right direction. You need to take out 10 days, revise rules. Like for example, today is 9th of November. Go till 18th of November, go till 19th of November, revise all the rules. Okay, now then do attempt-wise papers, do complete papers, read out summaries, and do your revision. Yes, this all is about UK variant advanced tax. This session is for UK variant advanced tax, and all the handouts and everything is for UK variant. Okay, so how we will be taking out this session? Now, simple approach will be that we will do a complete past paper of March 2020 attempt first. We will do a complete past paper of March 2020 attempt first. Okay, and in that, what will be our approach? We will read out each question. Whatever rules we will find out, we will simply go to my summaries and we will read out those summaries. And that is what I expect from you all also. That is all I expect from you all also. You people have to make sure that you practice 10 attempt past papers at least 2 or 3 times. Try to do 10 attempt past papers at least 2 to 3 times. Okay. I'll be making one WhatsApp group. You people can join them. Soon I will share a link of WhatsApp group on the chat. You people will be able to join that WhatsApp group. The purpose of making that WhatsApp group is that obviously in the session, we will be doing like 3-4 papers. But if any student want that, sir, I want answers or I want some help for other papers also. So yes, we can help you out and that is available. Okay, so WhatsApp group can be useful because obviously in 15 hours we cannot cover entire papers. We will try to cover as much as possible, but if someone wants these past papers compiled in updated form, they can take it from me and I have these my answers developed which we will be covering during the session. Okay, are you getting it? So now what we are doing is that we are starting our first paper of March 2020 attempt. We are starting from our first past paper of March 2020 attempt and we will try to revise the rules during the discussion of this past paper. Okay, and this is what I expect from you all is that you all should give 10 days for your revision of rules. 10 days for revision of rules. Take out 10 days, revise your rules. Okay, take out 10 days, revise your rules, and then attempt the attempt-wise past papers. And when I say attempt-wise past papers, these should be complete papers, not topical practice. The major reason of the students failing in the exam is that they say that, sir, we were not able to complete the paper. We were not able to deal with all the rules. When we find out the exam, we didn't remember the rules. Now, why this happens? This happens that because you don't practice complete papers. You just practice exam kit, which is topical. They do not include complete papers. Okay, and this is where you will get edge with me. This is where you will get edge with me. That when I teach, I always teach complete papers to my students. Okay, let's start. Okay, just a second. Some students are facing audio issue. I would say that everything is good from our side. You just need to check your connectivity. Or maybe you are listening on your mobile phone, that's why it's creating issue. So if you can join from your computer or laptop, this issue will get resolved. But if due to any reason it is not getting resolved, then don't worry about it. This session will be completely recorded. You will be able to get the recordings on the ACCA Venue channel. Okay, so don't worry about it. Don't panic about it. Okay, as far as summary notes are concerned, I would request the moderator, Abdullah, please upload the summary handouts. He'll upload it in a while. Till then, you can look at my screen, you can look at the screen which I'm sharing, and obviously the things will get normal. Okay. The moderator has shared the link of the WhatsApp group. If you have any other query, you can ask me on my WhatsApp. Okay. But obviously after the session, because I cannot use my mobile while I'm talking to you people. So you can coordinate with me after the session if you have any query. Okay, so I hope that you are understanding things. Okay, now I'm moving towards the first past paper, March 2020 attempt. What I want from you people is that I want you to be active. I want some questions and answers on the screen. Okay, so please don't be dead in front of the screen. Okay, please don't be dead. Please ask me some good questions. Okay, let's start with the March 2020 paper. Okay, let's start. Now, this is the complete paper of March 2020. Let's look at the rules that what the examiner asked and let's develop the answer for it. Okay, your manager has had a meeting with Corey, a client of your firm. Extracts from the memorandum prepared by your manager following the meeting and an email from him detailing the work he requires you to do are set out below. Extracts from the memorandum prepared by your manager dated 2nd March 2020. Background. Corey had always lived in UK until 6th April 2016. He sold his home in the UK. He sold his home in UK and moved to the country of Medora with his wife, Dana, and their daughter. They always plan to return to UK at some point. Now listen to it very carefully. Someone left UK, but he plans to come back. Someone left UK, but he plans to come back. Whenever you have a plan to come back, the rules of temporary absence will apply. They always plan to return to UK at some time. Now this gives me a link that, okay, I have to look at the rules of temporary absence. Okay? Now, such that they continue to be domiciled in UK. Corey began working for company in Medora on 1st May 2016. In March 2019, Corey's sister Florence became seriously ill. Consequently, Corey and his family returned to live to UK on 6th April 2019. Now, if you listen it very carefully, they had always lived, and on 6th April 2016 they left UK. Corey had always lived in UK until on 6th April 2016. Now 6th April 2016 means that they left UK in 1617. They left UK in 1617. Now when did they return? They returned on 6th April 2019. This means they returned in 2019-20. Now listen to it very carefully. You left UK in 1617. You left UK in 1617, but you came back in 2019-20. How many years? How many years of absence? Can you please tell me? 1617, 1718, and 1819. How many years? 3 years of absence. Now 3 years of absence means less than 5 years. 3 years of absence means less than 5 years. Let's take a stop here. Let's take a stop here. Go and look at the summary notes so that we can read out the relevant rules. If you go and read out the rules of temporary absence period, just a minute. If you go and read out the rules of temporary absence period, read out, what do they say? If a person has been UK resident for 4 or more years in last 7 years, and then he leaves UK residency for less than 5 years, then he is regarded as temporarily absent. Okay, go back to the question. What did happen? Corey had always lived in UK, which means he had lived in UK for more than 4 years. He had lived in UK for more than 4 years. Okay, then what did happen? He remained absent for how many years? He remained absent for 3 years. Okay, look at the rule. Look at the rule. If a person has been UK resident for 4 or more years in last 7 years, and then he leaves UK residency for less than 5 years, then he is regarded as temporarily absent. Now, what do happen when a person is temporarily absent? What does happen? Now listen, normally no CGT is assessed in non-residency period, but in case of temporary absence, following rules are relevant. Now, do anyone remember the rules of temporary absence? If you leave UK for less than 5 years, then what happens? The rule is very simple. The assets which you owned while being resident but sold during non-residency will be subject to CGT when you will return back to UK. Listen it again. Listen it again. If you leave UK for less than 5 years, then you are called temporarily absent. Now, what happens if you are temporarily absent? What happens is that if you will sell any asset while being non-resident, then those disposals will be subject to CGT when you will return back to UK. Okay, let's read the rules. Assets purchased in residency period but sold during non-residency. You were resident earlier, you had purchased some assets, you became non-resident, and that non-residence was temporary absence, then UK tax will be payable when a person returns to UK. When a person returns to UK, the very simple situation. Tax department says that when you left UK, we will look at your wealth statement. When you return back, we look at your wealth statement. If any asset is missing, if you have sold any asset during non-residency, we will charge tax on that disposal whenever you come back. Whenever you come back, we'll charge tax on that. Okay. Now, assets purchased and sold in non-residency period, no tax is payable on that. Now, what do you mean by this? Now, what does HMRC do is that they compare our old wealth statement with a new wealth statement. They compare our old wealth statement with a new wealth statement. Basically, wealth statement means the asset position. Basically, the wealth statement means your asset position. They look at your old wealth statement, they look at your new wealth statement, and they compare it. If any asset is missing, they charge tax on that. But for example, if there is any asset which you purchased while being non-resident and you sold it also while being non-resident, so obviously the tax department will not be able to know about that, and they will not charge any tax on that. And if there is any asset which is purchased in non-residency but sold after becoming resident, UK tax will be chargeable in the year of disposal. Okay, now if you come back to the question, what you can look, please be attentive. Now, he had always lived in UK. He had always lived in UK until 6th April. He sold his home in UK and moved to country of Medora with his wife Dana and their daughter. They plan to return to UK at some point in future. Okay. They continued to be domiciled in UK. Corey began working for company Medora on 1st May 2016. In March 19, Corey's sister Florence became seriously ill. Consequently, Corey and his family returned to live in UK on 6th April 2019. They came back in 1920. They left in 1617. Their absence was less than 3 years, so they are temporarily absent. Okay, let's look at further. Period from 6th April 16 to 5th April 2019. Corey was not resident in UK during this period. However, he visited the UK as follows: 1617, 49 days, 1718, 105 days, and 1819, 74 days. Since 6th April 2019. On 1st June 2019, Corey and Dana purchased a new home in UK. On the same day, Dana started a new full-time job in UK and became UK resident. Corey and Dana have retained their home in Medora because Corey has continued working there and does not work in UK. It is just a second. It is envisaged that Corey will have been in the UK for 115 days in the tax year 2019/20. Disposal of assets in the tax year 1819. Now in 1819 you were non-resident. In 1819 you were non-resident. On 1st December 18, Corey sold a statue situated in the garden of his home in Medora. He had purchased the statue for £17,000 on 1st September 2016. The sale resulted in a capital loss of 7,400. Okay, listen to it very carefully. Now, when did he purchase? He purchased in 1670. He purchased in 1617. Now in 1617 also you were non-resident. Hello everyone. Hello everyone. I have a question. I have a question. Purchase in 1617, you were non-resident. Sold in 1819, you were non-resident. What will be the impact of tax? Please tell me. I'm waiting for your answers. He purchased the statue. He purchased the statue in 1617 when he was non-resident. He sold it in 1819. He was non-resident. Only 10 students have answered. What about rest of the 88 people? What are they doing? I want answers. No tax, no tax, no tax. One of my friends has said no CGT will be payable, rather loss relief. No, no, wrong. Very good answers, nothing. No UK tax, no tax, no effect. Very good. Why? Now go and look at the rule. This is what I ask you to do a revision in this form. Go and look at the rules. What are the rules? See, asset purchased and sold. Asset purchased and sold In non-residency period, no UK tax. Asset purchased and sold in non-residency period, no UK tax. Or I would say you can use a simple logic. Now, how can HMRC know? How can tax department know that you purchased that asset and you sold that? Because you purchased in non-residency and you sold it in non-residency. They cannot know about that. That is also logical. Now, if you look at the question, you purchased the asset. You purchased the asset in 1617 when you were non-resident. You sold it in 1890 when you were non-resident. So what will happen? No tax. Very simple. No tax. Okay? Some very good answers, but still I feel that many of my friends are sleeping. They've just started the webinar and they are sleeping. Please, I want some good answers. Okay? Then only this session will be productive and you will be able to revise your rules with me. Okay? And in the handout section, you can now find the summaries and the handout of this question and answer also. So if you want, you people can download it also. And if you have a printer available now, you can simply take out the printout and you can simply do annotations also on that. Okay, let's move forward. On 1st February 2019, as the result of commercial takeover. Hello. On 1st February 2019. What is February 2019? 1890. Corey received 4,000 shares in TW PLC and 12,000 pounds cash in exchange for 2,000 shares in SQ PLC. My friend, this is P2P takeover. Paper to paper takeover. There is a situation of a takeover. One share in TW PLC was worth 3.5 pounds on that day. Corey had purchased 2,000 shares in SQ PLC for 13,500 on 1st June 2013. 1st June 2013 means 1314, and SQ and TW PLC are quoted companies. I want answer from you people, please. I want answers from you people. I don't want sleeping audience. Now, when did he purchase these shares? Tell me. He purchased these shares in 1314 when he was resident. My friend Saifur Rahman, please listen to the question carefully. He purchased these shares in 1314 when he was resident. When was the takeover? Takeover was in 1617 when he was non-resident. Okay, you people can answer me questions on this question tab also. I can see all your answers. Okay, so you can simply answer me on the question. Like if you want to write down the answers which I'm asking you, you can write down on that this question tab. Okay, but please listen again. He purchased the shares in 1314 when he was resident. The takeover was in 1617 when he was non-resident. Now listen to it very carefully. Whenever there is a paper-to-paper takeover, there are two types of considerations which you have received. 4,000 shares and 12,000 pounds in cash. 4,000 shares and 12,000 pounds in cash. Now, 4,000 shares means share for share exchange, no gain, no loss. Share for share exchange, no gain, no loss. But when there is cash involved, the cash portion gets disposal. The cash portion gets chargeable. But the problem is that at the time of this takeover, you were non-resident. Please don't rush up. We are not playing rapid fire round. We have to give it a thought. On cash portion, there will be some tax. On cash portion, there will be some tax. But the problem is that at the time of takeover on 1st February 2019, when did this takeover happen? On 1st February 2019 as a result of commercial takeover. Sorry, I wrote it wrong. The takeover happened on 1st February 2019. 9/18/19, you are non-resident. The takeover happened when you were non-resident. Now, if you go back to the rules, in 18/19, you were non-resident. Now, if you go back to the rules and you look at there, if you remember from the summaries and tax rate, asset purchased in residency period but sold during non-residency period, UK tax will be payable when person returns to UK. When a person returns to UK. Now go and look at it back again. Now, when did you purchase these shares? You purchased these shares. Corey had purchased these shares in SQ PLC on 1st June 2013. 13/14, you were resident. And this takeover is on February 19, when you were non-resident. So if there will be any chargeable portion, that will be taxable when you come back to UK. Okay? One of my friend has asked that, sir, in the exam, won't we read out the question first? My friend, I'm reading out the question. I haven't started the solution. I will discuss the solution with you. But what I always say to my students is that if you read the question carefully, if you read the question with extreme care, what will be the benefit? The benefit will be that while writing down the answer, you will save your time. Now see, I'm jogging down all the rules while reading the question. Okay? So, as far as disposals of 18/19 are concerned, as far as this statute is concerned, we discussed that there will be no tax on it. Okay? As far as these TW shares are concerned, we said that it's a P2P takeover. The cash portion will get chargeable, but as he was non-resident at that time, so he'll pay tax when he'll come back. Okay, he will pay tax when he'll come back to UK. Okay, now let's move forward. Disposal of assets in 2019-20. Now, if you look at it carefully, in 1920 you were resident. Because you returned to live to UK in 6 April 19. So if in 1920 you were resident, then once you become resident, the taxation becomes normal. Once you become resident, the taxation becomes normal. Okay, let's look at it. On 1st August 2019, Corey sold a house situated in Medora. The house was purchased on 1st July 2015 and has always been rented out. And has always been rented out. The sale realized a gain of 33,900. On 1st December 19, Corey gave his sister Florence 700 out of 4,000 shares he owned in TW PLC. One share in TW PLC was worth £4.5 on that day. Okay, now paintings owned by Corey's mother. Corey is asked for advice on the inheritance tax advantages of its mother, Amber, who is UK domiciled, of making lifetime gifts to Corey of either or both of the following paintings: watercolor and a portrait. The current market value. What is the anticipated change in value? Falling value. And this is increasing value. What he has asked, my friend, look at it here. Okay. Inheritance tax advantages of making a lifetime gift. I want you all, hello everyone, please tell me some benefits of making a lifetime gift. Please tell me, everyone. What are the benefits of making a lifetime gift? Everyone, please. 85 people are there. Only few are answering. Everyone. So the price gets fees, annual exemption, no tax after 7 years, no tax, tax back. So many answers are coming. Yes. Fall in value relief. If you live more than 7 years, then there is no tax. Yes, very good. So my friend, you all remember the rules. It's very good. Only thing which you people need to do is to do some past paper practice and look at my summaries. Okay, taper relief is available. Very good. No tax after 7 years. Value is locked if value increases. Very good. So, are there these benefits written in your summaries? Yes. Yes, they are written. Like if you go in my summary notes, here they are. The benefits of lifetime gift. Annual exemption of 3,000 per year is available. Small gift exemption of £250 per donee is available. Routine gift exemption is available. Like if a gift gets classified as a routine gift, then that gets exempted. No debt tax if 7 years have passed. Taper relief may be available. Okay, what else will happen in case of lifetime gift? Value of gift gets locked. That is, if value of asset increases after lifetime gift, then no IST on increased value. If value of asset falls, then fall in value relief is available. Okay, marriage exemption is available if you gift at the time of marriage. So, how many benefits of making a lifetime gift? Annual exemption. Number one. Small gift exemption is available for lifetime gifts. Routine gift exemption is available for lifetime gifts. If 7 years have passed, then there is no debt tax. Taper relief is available. The value of gift gets locked. These all are the benefits. Okay. What my advice to my students is always that what the students do is that they waste entire of their time in revising the rules. Don't get panicked by looking at the rules. Revise the rules. Have a reasonable grip on them. Then try to give some time on past papers. Try to give some time on past papers, okay? One of my friend Yasser Khan is saying that sir, transfer of NRB is also benefit of lifetime gift. No, Yasser. Transfer of NRB is a different concept. Like when one of the spouse dies, his NRB gets transferred to another. Now that has nothing to do with the benefits of lifetime gift. Okay, so maybe you are mixing it with the benefits of lifetime gift. Okay, coming back to the question. Income tax refund. A few months ago, Corey received a refund of income tax from HM Revenue and Customs. In respect of the tax year 15-16, he has not been able to determine that why this refund was made. Okay, he's not able to understand that why they have made them this refund. So this is a small part relating to ethics. One of the students has asked her, how many past papers do you suggest that we practice? My advice is to do 10 attempts past papers at least 2 to 3 times. 10 attempts past papers at least 2 to 3 times. As I stated at the start of the session, give 10 days for the revision of the course and then give entire of your time to past paper practice so that you can understand the rules. Okay. So where can we find 10 attempt past papers? Yes, my friend, I told this at the start of the session that the past papers available at ACCA website are outdated. So how can we find the updated past papers? I will provide you 4 of the past papers during the session. For rest of the papers, I have made the WhatsApp group. I'll send you there. Okay. I'll share the link of the WhatsApp group again. So if anyone want rest of the papers, anyone want my solutions more, I'm available for help. I can give you them also. Okay. Now let's come back. Okay. Extracts from email from your manager dated 3rd March 2020. Taxation in the country of Medora. There is no capital gains tax in Medora. There is no double tax treaty between UK and Medora. Please, now the requirement starts. Please prepare a memorandum for the client file consisting for the work set out below. Corey's UK residence status for the tax year 2019/20. Now we have to discuss the UK residence status. Explain how Corey's residence status for 2019/20 will be determined. How the residence status will be determined. And conclude on his likely residence status for the year. Corey will have lived in UK, will have lived in both of his houses in UK and in Medora during the year, such that he will not have his only home in UK for the purpose of automatic UK residence test. State how becoming UK resident would affect Corey's liability to UK income tax. How many marks are for this part A? 9 marks. How many marks? 9 marks. Okay. Now, I want you all to be connected with me for next 10 minutes. What is the question? Explain how the residence status will be determined. I want your concentration, everyone, please. How the residence status is determined. Now, always remember 3-step approach. Always remember 3-step approach. Question 1. Question 1. Are you? Please don't hurry. Please don't rush. Some students have started giving answers that say, look at UK ties. No. How to determine UK residency? Please hear to me. Please look at me. Question 1. Are you automatically non-UK resident? Question 1. What is question 1? Question 1. What is question 1? Question 1 is, are you automatically non-UK resident? Are you automatically non-UK resident? Are you automatically non-UK resident? Yes. If the answer to this question is yes, then okay, you are non-resident. You are non-resident. Fair enough. But if the answer to this question is no, then move to question number 2. Are you automatically UK resident? Are you automatically UK resident? If the answer is yes, then you are resident. But if the answer is no, then the question is that who are you? Are you automatically non-UK resident? No. Are you automatically UK resident? No. Then who are you? Hello. Please listen. Are you automatically non-UK resident? The student asked it, sir, how do I determine this automatic non-UK residence? How do I determine this automatic non-UK residence? How do I determine this automatic UK residence? How? So now, in order to determine automatic non-UK residence, there are three things which we will ask. There are three things which we ask. Number one, lived less than 91 days in UK, lived less than 91 days in UK, such that person has overseas job. Such that person has overseas job. Like for example, I'm an employed person, I work in Pakistan, I have a job. If I go to UK and I live less than 91 days, then I will be called as non-UK resident. Number two, lived, this software is a bit problematic. Sorry for that. Lived less than 46 days in UK, such that no overseas job. Now, if you don't have a job, you have to leave UK within 46 days if you want to remain non-resident. Question number three, lived less than 16 days in UK, if UK resident in any of previous 3 tax years. Now, these are the 3 questions through which you become automatically non-UK resident. Less than 91, less than 46, and less than 16. Let's look at Corey. Let's look at Corey. How many days did Corey live? How many days did Corey live? Hello, where is it? Where is it? Yes. How many days did Corey live? He lived for 115. Hello, my friend Fahim, you gave a wrong answer. In 2019-20, he lived for 115 days. We are talking about 2019-20. How many days did he live? 115. Now 115 are not less than 91. 115 are not less than 46. And 115 are not less than 16. So this means, are you automatically non-UK resident? No, because I live for 115 days. Are you automatically non-UK resident? No, because I live for 115 days. For non-UK residents, I had to live less than 91, less than 46, and less than 16. How many days did I live? I lived for 115. So I'm not non-UK resident. Second point, are you UK resident? Now, how a person becomes UK resident? 3 questions. Number 1, live for 183 days. Oh, sorry, I lived for 115, I didn't live for 183. Live for 365 continuous days. 365 continuous days over 2 fiscal years. No, sorry, my days were 115. They didn't pass 183. They didn't pass 365. Okay. Point number three. Point number three. Live for 30 days such that only home is in UK. Such that only home is in UK. Now, Corey don't have his only home in UK. Corey also have a home in Medora. Now, Hanan has asked a question. So in second point, don't we have to look for previous 3 taxes? No, Hanan. In second point, we only look at live less than 46 days in UK, such that no overseas job. In point 1, 91 days, all these points, I would say the first 2 points are for current fiscal year. In this third point, we look at that if you have been resident in previous 3 years, then we look at whether you live for less than 16 days or more than 16 days. Come back, everyone. Everyone. Hello. I have a question. How many days did she live? Did he live, Corey? 115. Now this 115 is not less than 91. This 115 is not less than 91. It's not less than 46. It's not less than 16. So this means that he is not a non-UK resident. Question 2. Are you UK resident? Question 2. Are you UK resident? 183, 365. He is not a non-UK resident also. Then who is he? Which category do he belong? So we say, okay, sorry. Now we will consider UK ties and we will look that to which category his most of the characteristics belong. We will look at his family. We will look at his work tie. We will look at his days in UK tie. Now, if you go and look at the summary notes, you can find the entire data there. You can simply go and look at the summary notes. Determination of UK residency. A person is automatically non-UK resident if he lives less than 91, less than 46, and less than 16. Now, he is not automatically non-UK resident because he lived for 115 days. A person is automatically UK resident if he lives for 183, 365, or 30. But this condition also not applies on him because he lived for 115, which is less than 183, 365. Okay? Now, if a person is not automatically non-UK resident, nor he is automatically UK resident, then following ties are considered and compared with his days in UK. Now there are 5 ties. Close family, spouse or children under 18 years are UK resident. Yes, Corey's wife became UK resident. It was written in the question that Corey's wife Dana got a UK job. Number 2, accommodation available in UK for at least consecutive 91 days. Yes, they purchased a house in UK. Number 3, 40 days work in UK. No, Corey was not working in UK. Lived 90 days in UK in current or any of the previous 2 fiscal years. Yes, he planned to live 115, which satisfy 90 days condition. Comparative days in UK are greater than any other country. Okay, now if you go and look at the question, and look at the situation of Corey. Now, what is the situation of Corey? Just let me clean this screen a bit. Now, on 1st June 2019, Corey and Dana purchased a new home in UK, which means they have accommodation in UK. On the same day, Dana started a new full-time job and became UK resident. The wife, the close family became UK resident. Corey and Dana had retained their home in Medora because Corey had continued working there and does not work in UK. It is envisaged that Corey will have been in the UK for 115 days. Now, if you go back to the summaries and tax rate sheet, now this close family tie is established because his wife has become UK resident. Number two, accommodation is available in UK because they purchased a house in UK. 40 days work tie is not established because Corey is not working in UK. Lived 90 days in UK. Yes, this tie is established because he has lived for more than 90 days. Lived 90 days in UK. Yes, this tie is established because he is living 115 days. Comparative days in UK are greater than any other country. No, this will not be established because out of 365, he will live 115 in UK and rest days. How many rest days? 250 days. 250 days in Medora. So obviously more days are of Medora. So this means that 3 ties are established. Let's go and look at the tax rate sheet given in the question. Or it will be given in the exam paper. You'll go and look at the tax rate sheet. Yes, here it is. Yes. Now, there are 2 columns, previously resident and not previously resident. Previously resident means resident in any of 3 previous fiscal years. Previously resident means resident in any of previous 3 fiscal years. This is called previously resident. And not previously resident means not UK resident in previous 3 fiscal years. Now, if I look at the situation of Corey, was he resident in the previous 3 fiscal years? No. 18-19 NR, 17-18 NR, 16-17 NR. He has been non-resident in previous 3 years. So his column will be this one. How many days do he plan to live? Hello? He planned to live how many days? 115. So 115 means this column. Or sorry, this row. How many ties does he need? He needs at least 3 ties. Do he have 3 ties? Do he have 3 ties with UK? Yes. Yes, he had 3 ties with UK. Now, what were those 3 ties? Close family member in UK, accommodation in UK, and more than 90 days in UK. Okay, let's go and read the answer. Okay, now this is the answer which I have written. Okay, because obviously if I write the answer with you people, then it would take a lot of time and it would waste our time of the, which are only 15 hours obviously. So we'll read out the question. Obviously I have briefed you the entire answer. Now always remember one advice of mine. In question 1, you have professional marks available. Professional marks will be available for approach taken to problem solving, the clarity of the explanation, calculation, the effectiveness with which the information is communicated, and overall presentation. Okay. Now, this is also my writing, but the only difference is that this I have written on iPad, on which I write regularly, but currently the webinar don't support the iPad, so I'm writing on Surface. So on Surface, I don't have a writing practice. That's my writing is going bad, but my normal writing is good. This is what I have written already earlier for you. Okay, now, Sayyid Mohammed, you have to answer the questions in this question tab only. There is no separate tab for answering. Whenever you write something on this question tab, I'll look at that. Okay, now, Corey memorandum for client files, client Corey, tax senior, date 3rd March 2020. One student is asking, sir, can you share these answers? My friend, I've already shared the answers. Go and look at the handout folder. Open the file 1, day 1 and 2 March 2020. It includes everything. I've already shared it. Okay. Now, please come back to the question. Now, yes, this format of memorandum is same for all questions. Memorandum for, client, from, and date. You always have to make this format for memorandum. Okay. Part A. Corey's UK residence status for the tax year 2019-20. Now, Corey will not be regarded as automatically non-UK resident as he plans to live for 115, which are more than 90 days. Now, for automatic non-residents, there are 3 levels, if you remember. For automatic non-residents, there are 3 levels. For automatic non-residents, there are 3 levels. Hello. 90 days, 46 days, and 16 days. Do you remember? As he planned to live for 115, this means that automatic non-residents will not apply on him. Automatic non-residents will not apply on him. Okay? Further, Corey will not be regarded as automatically UK residents as he fails to satisfy any of the following conditions. Lives 30 days in UK such that only home is in UK. This condition will not apply on Corey as he also owns a house in Medora. Live 183 days in UK in 1 fiscal year. Now, as Corey will live for 115, this rule will also not apply on him. Live for 365. Lives for 365 days continuously over 2 fiscal years. Corey failed to satisfy this condition as he will not live for continuous 365 days. So none of these 3 conditions apply on Corey. Now, as I discussed with you above, that Corey was not automatically non-UK resident, and he was not automatically UK resident. So we had to move towards UK ties. We have to move towards UK ties. Now, in order to determine Corey's UK residence, his UK ties will be considered as none of the automatic tests apply on him. As Corey has not been UK resident in any of the previous 3 fiscal years, therefore he needs at least 3 UK ties to gain UK residency, considering his plan to live in UK for 115 days. Now, from where did I find this? If you go and look at the table which I showed you just a second ago, if you have not been UK resident in any of the 3 previous fiscal years, then your column is this, 115 days. You need at least 3 UK ties. How many UK ties? At least 3 UK ties you need. You need at least 3 UK ties to become UK resident. let's come back to the question. If UK ties are considered, then Corey will be able to establish following ties. Now, we already discussed this issue. Close family member is resident in UK, as Corey's wife Dana gained UK residency. So close family member is UK resident. Accommodation is available in UK for 91 days, as Corey purchased accommodation in June 2019. Days in UK is also established, as Corey has lived for more than 90 days. Okay, his plan is to live for 115 days. His plan is to live for 115 days. His plan is to live for 115 days, which is obviously more than 90 days. Work tie is not established, as Corey will not work in UK. However, it will not affect Corey's status, as he needs 3 UK ties to be established, which has already been fulfilled. Considering this, Corey will be UK resident in 1920 if he lives for 115 days. As Corey will be regarded as UK resident in 1920, therefore he has to pay UK tax on worldwide income. His overseas income will include earnings in Medora, on which he will have to pay UK tax. If you become UK resident, you have to pay tax, UK tax on your worldwide income. You all know, if you become UK resident, you have to pay tax on your worldwide income. If there is no double tax treaty between UK and Medora, therefore income of Medora will be taxed both in UK and Medora. DTR will be available at lower of some easy discussion. I don't think that it will create trouble for you people. So the first requirement, if you look at this first requirement, what was it? Corey's residence status for 1920. How many marks? 9 marks. He asked that explain how Corey's residence status will be determined, and conclude on his likely residence status, and state how becoming residents will affect Corey's tax liability. Okay? Whenever you have to determine residency of someone, always follow 3-step approach. Are you automatically non-UK resident? Are you automatically UK resident? And the third step is that consider UK ties. Okay? Consider UK ties. Always look at a 3-step approach. Done? So I think that this 9 marks part is understood to everyone. Is there any question anyone wants to ask? Please. Is there any question? Hello? Out of 85 attendees, only 3 have replied. I want everyone to reply so that you remain alive. Otherwise, you'll die during the session. Okay. Now there are some good replies coming. Do we need to write all ties in the exam, or just those which are satisfied? Aram, you only need to write those which are satisfied. You don't need to discuss all of them. One student is saying that, sir, it's too confusing. Okay, you can please ask me anything which you want to ask, because majority of the students are saying that, sir, we are okay with it. Okay, so okay, so let's look at it again. Let's come back, move forward. No, my friend, you don't need to write anything about remittance basis. One student is asking, sir, can you please explain the marks allocation of each point? Jalal, I would say that in advanced tax, you cannot identify the marks allocation of each point. It's not like advanced auditing. In advanced tax, you have to discuss the completeness of the answer. You cannot make a rule that, okay, I'll get 1 mark for each point. Okay, so what I would say is that don't try to make a specific mark allocation in advanced tax specifically. Okay. Aaron has stated, sir, that, sir, how we remember the rules? Now, for rules, you have to give some time. If you remember at the start of the session, what did I say? That give 10 days for revision. Give 10 days for revision and then go for past papers. Okay, give 10 days for revision. You have these summaries. I have shared all the summaries. You can download it from the handout portion. Download those summaries, read out them, and believe me, you'll have good grip on rules. Okay. Sir, by revision, you mean memorizing the rules by heart? No, no, please don't memorize the rules by heart. Just have a thorough understanding. What I said in the start was that what the students do is that they try to learn the rules too much. Don't do this. Don't create the rules a headache on yourself. Get a thorough understanding of the rules and start doing the past papers. Along with past papers, your rules will be revised again and again. Okay? So if it's no, there are no marks deduction for spelling errors. As far as it's understandable, there are no marks deduction. Okay, for past papers, Akil, I said that you have to at least practice 10 attempt past papers 2 times. Okay, no Jalal, no need of it. You can rely on the answers I'm giving. And as far as examiner answers are concerned, Jalal, in advanced stage, those answers get outdated because after the updation of the Finance Act, the old answers given on the ACCA website gets outdated. This is the reason why I write down my own answers for the students. Okay, I'll share 4 papers with you people here in this practice to pass session. And for rest of the papers, I told you I'll share it in the WhatsApp group. Okay, now please come back to the question. Otherwise, we'll keep on doing this discussion and we'll not be able to do that past paper. Okay, we'll do some more talking after some time. Please come back to the question. 11 marks part. Okay, part B, Corey's disposal of assets in the tax year 1819 and 1920. Now, we have to talk on Corey's disposal of assets which were made in 1819 and 1920. Please come back to the question, everyone. We have to discuss about these disposals. Let me clean up the screen once. Now, let's read out again. Disposal of assets in the tax year 2018-19. Now in 1819 we were non-resident. Okay, in 1819 we were non-resident. Disposal of assets in 1920. In 1920 we were resident. When we become resident, we have to pay UK tax on all assets. When we become resident, we pay tax on all assets. Okay. But when we are non-resident, I told you while reading the question that Corey's situation is of temporary absence. Corey's situation is of temporary absence. Okay. Now, on 1st December 2018, Corey sold a statue situated in the garden of his home in Medora. He had purchased the statue for 17,000 on 1st September 2016. The sale resulted in a capital loss of 7,400. Now, it was purchased in September 16, which means it was purchased in 1617. Now in 1617 also, he was non-resident, and he sold it in December 18, which is 1819. And in that year also he is non-resident. If you purchase and sell an asset while you are non-resident, then there is no tax on it. You purchased and sold the asset while you were non-resident, then there will be no tax on it. Okay, let's look at it. Everyone please concentrate. Now, in 2018-19, Corey was non-UK resident. However, an issue needs to be considered that Corey's non-UK residence in 1819 will be regarded as temporary absence. Now, why it will be regarded as temporary absence? It will be regarded as temporary absence because Corey was absent for 3 years. Corey was absent for 3 years, 1617, 1718 and 1819. When you are absent for 3 years, this means that you are absent for less than 5 years. If you are absent for less than 5 years, then your absence is regarded as temporary absence. I already discussed with you while I was reading the question. So if someone has joined late, maybe he has missed that part. Corey has always been UK resident before becoming non-resident in fiscal year 1617, which means that he is satisfied of the condition of being resident for at least 4 years out of last 7 years. First of all, we are discussing the rules of temporary absence. That Corey was always resident for UK. Now, whenever you are always resident for UK, this means that you satisfied your 4-year condition. Further, he gained UK residency after 3 fiscal years, which satisfies condition of being non-resident for less than 5 years. As both of the conditions are satisfied, therefore his non-residence will be regarded as temporary absence. I have already discussed with you while I was reading the question. Now, as per rules of temporary absence, Corey has to pay UK tax on disposals made while being non-resident of assets which were owned while being UK resident. Tax will be payable when UK residency will be regained. Now, first of all, I'm talking about the statue. First disposal of 2018-19 is a sale of statue. It will not be subject to UK tax as it was purchased and sold both in non-residency. Yes, for temporary absence, both conditions have to be satisfied simultaneously. Okay, if I go back and take you people to the question, please. Now, look at it here. Corey has always lived in UK. Now, what do you mean by always lived in UK? This means that he had been UK resident for more than 4 years. On 6th April, on 6th April 16, he sold his home in UK and moved to country of Medora. This means he left UK residency in 1617. They always plan to return to UK at some point, such that they continued domicile. Corey began for working in Medora in May 16. On 1st March 19, Corey's sister Florence became seriously ill. Consequently, Corey and his family returned to UK on 6th April 2019, which is 1920. Now, They lived in UK for more than 4 years. They left UK for only 3 years. 16, 17, 17, 18, and 18, 19. Their absence will be called as temporary absence. Whenever a person is temporarily absent, there are 3 heads which you need to consider. Head 1, assets. Assets which you purchased while being resident. Assets which you purchased while being resident but sold during non-residency. Now, if you sell something during non-residency, which you purchased while being resident, you have to pay tax when you come back to UK. Repeat, you purchased something while you were resident, but you sold during non-residency. And if that non-residency is temporary absence, you have to pay tax when you come back to UK. You have to pay tax when you come back to UK. Okay? Number 2, you purchased an asset while being non-resident and you sold it while being non-resident. No tax on that, like this statue. You purchased while being non-resident and you sold it while being non-resident. No tax on it. No tax on it. Simple as that. Number 3, you purchased something while being resident. Oh, step 3, you purchased something while being non-resident, but you sold after becoming resident. Then there is normal tax on that. Okay, I have made you go through the rules on my summary handout. I hope that you all remember. If someone has joined late, don't worry about it. The recordings will be available within 24 hours on ACCA channel of Vimeo. Okay, on 1st December 2018, Corey sold a statue situated in the garden of his home, Medora. He purchased the statue in 1st September 2016. It was purchased while being resident and it was sold while being non-resident. Both transactions were done while being non-resident, so there will be no tax on it. Let's look at second one. On 1st February 2017, as a result of a commercial takeover, Corey received 4,000 shares in TW PLC. Please everyone listen. Corey received 4,000 shares in TW PLC and 12,000 pounds cash in exchange for 2,000 shares in SQ PLC. Now, there was a takeover, a P2P takeover, paper to paper takeover. What did you got? You got 4,000 shares and you got 12,000 cash. Hello everyone. Share for share, no tax. Share for share, no tax. Cash or shares, the tax will be charged on that. Do you people remember P2P takeover? Do you people remember P2P takeover? Share for share. Share for share. Share for share, no tax. But if cash is involved, then yes, tax will be charged. One share in TW PLC was worth 3.5 pounds on that day. Corey had purchased 2,000 shares for 13,500 on 1st June 2013. Now this means that you purchased in 13-14. In 13-14 you were resident. In 13-14 you were resident. Now when did this takeover happen? This takeover happened in 18-19 when you were non-resident. Now, at the time of takeover, the cash portion will get chargeable. At the time of the takeover, the cash portion will get chargeable. Now, as the cash portion will get chargeable, but the problem is that at that time we were non-resident. The problem is that at that time we were non-resident. So if we were non-resident, then what will happen? If there is any chargeable thing arising when we were non-resident, considering that we are subject to rules of temporary absence, we have to pay the tax when we will come back to UK. Now, when I use the word when we come back to UK, this means that we have to pay tax when we returned UK residency in 1920. Okay, let's look at the answer. Please don't rush, please concentrate. However, shares of SQ plc will be subject to UK tax when Corrie gains UK residency in 2019-20. As shares in SQ plc were purchased in June 13, when Corrie was UK resident, and were sold in 1819 when Corrie was non-UK resident, as per rules of temporary absence, tax will be payable on them when UK residency is regained. When UK residency is regained in 1920. You purchased something when you were resident. You purchased something when you were resident, and you sold it. A gain arose on that when you were non-resident. So you have to pay tax when you will regain your residence. Okay? As per rules of paper-to-paper takeover, cash portion of consideration received will be subject to UK tax. Okay? Now, if you look at the question carefully, now what was the cash portion? In June 13, you purchased 2,000 shares in SQ plc for £13,500. In February 2019, there was a takeover by TW plc of SQ plc. What was the consideration? TW plc and share and cash. 4,000 shares and cash. The value of the shares, the value of the cash, the total value. You calculate the percentage, and then this cost of 13,500 is allocated. Basically, the principle of paper-to-paper takeover is that you allocate the cost of old shares on new consideration. What you do is that you allocate the cost of old shares. What was the cost of old shares? You had 2,000 shares of SQ. Now this cost will be allocated on shares and cash portion. And how it will be allocated? This will be allocated according to the percentage. Now, how did you calculate this percentage? You got 4,000 shares worth £3.5 each. And you got cash of 12,000. So total is 26,000. 14,000 divided by 26,000, 53.8. 12,000 divided by 26,000, it's 46.2. You calculate a percentage. You calculate a percentage and you allocate the cost. The cost of old shares. And then cash portion consideration will get chargeable in 1819. At the time of takeover, the cash was 12,000. The cost allocated to cash portion was 6,237. So the gain on cash portion will be 5,763. The gain on cash portion will be 5,763. I hope that you people are getting it. Okay. Now, whenever there is a takeover, the cash portion gain gets chargeable. But obviously, at the time it is getting chargeable, we were not UK resident at that time. We were under temporary absence rules. So we will pay tax whenever we will gain our UK residency back. So as we will gain our UK residency back in 1920, so we will pay tax at that time. Okay? Any question? Any question? What is DP? DP is disposal proceed. You got cash of 12,000. You get cash of 12,000. So the cash proceed is 12,000. The cost allocated on the cash portion is 6,237. So the cash portion gain which will get chargeable is 5763. Okay, paper to paper takeover rules, share for share exchange, no gain, no loss, cash for shares, the cash portion gets chargeable. The cash portion gets chargeable. Okay, anyone else, please? Any other question? Hello, everyone. Have you people gone to sleep? No question. No, sir. No, sir. No, sir. No question. Clear. Okay. Good. What do we do with the share gain? Abdul Wahab, in case of paper to paper takeover, we don't calculate the gain on shares. Whenever we will sell these shares, this old cost will be used for calculation of the gain. So automatically the gain will be chargeable when these new shares will be sold. Okay, Rafi, yes, we are going for a break. Just let me complete this part. Okay, now coming back to the question, I want you all to please concentrate a bit. Just wait for 5-10 minutes and then we'll take a break. You people can go and get yourself refreshed. I know that you people are getting exhausted. Okay, so do you suggest we do these calculation on the word processor or spreadsheet in the exam? Now, if in your country the exam is computer based, then you can do calculation on word processor and on Excel both. But I personally think, it's my personal opinion, that rather than going to spreadsheet again and again, you can make a table on the word processor. You can make a table on word processor and you can do your calculation on the calculator. I always prefer that. Like whenever I made my students practice 3 papers on the software, so I always do calculations on the word processor. I use my calculator and I write down the numbers on word processor. It's much easier. When you go and use the spreadsheet, the problem is that changing the windows make it confusing. Okay, no, Akil, there is no extra marks. It is clearly written on the ACCA website that it's the student's choice that if you want to solve complete on the word processor or you want to use a spreadsheet. My personal opinion is that making a table on word processor and solving it there and using your manual calculator is better. Jalal says that there are any chances that the papers will be cancelled and they will be computer based. Believe me, Jalal, I don't know. I don't know that how this COVID will react. Today we have got some good news that vaccine has been developed by Pfizer company. So we hope so that things will be fair enough. Okay. Samila, it's your choice. If you want to use the spreadsheet, you can do that also. But I gave my opinion. Now, in AAA, you have to use the trend, so it is easy to copy paste the formulas. But in ATX, there are no straightforward formulas. I'm saying you to use the word processor only because it will save your time in changing the windows. Like when you change the window, it gets confusing. You can simply solve it on one screen, just create a table, put the numbers, use your manual calculator. But still, if you want to use spreadsheet, it's your choice. Okay. Now, sorry, Vakas is getting annoyed. He's saying that please do the question. Why you get away here and there? Sorry. Come back to question, everyone. On 1st August 2019, Corey sold a house situated in Medora. Now, if you remember, in 1920 we were resident. If you remember, in 1920 we were resident. Okay. This house was purchased on 1st July 2015 and has always been rented out. The sale realized a gain of 33,900. My friend, very simple. You sold this house when you were resident. You sold this house when you were resident. Whenever you sell something when you are resident, you pay normal tax on it. In 2019-20, you were UK resident. We just determined it in the previous part. In 2019-20, we were UK resident. And if we sell something while we are UK resident, we pay normal tax on that. We pay normal tax on that. There is no debate on this. Okay? On 1st December 2019, Corey gave his sister Florence 700 out of the 4,000 shares he owned in TWPLC. Now, TWPLC shares which you got as a result of the takeover, he gave means he gifted, because he didn't sold, he gave, he gifted 700 shares. One share in TW was worth 4.5 pounds. Now, our holding was less than 1%. Listen it very carefully. Our holding was less than 1%, and the company is quoted company. Hello, I have a question for you people. I have a question. Gift relief. Do you people remember? Gift relief. Do you remember? 5 situations of gift relief. 5 conditions of gift relief. Gift of unincorporated business. Number 1. Gift of unquoted shares. Number 2. Gift of quoted shares in which you should have 5% holding. Gift of quoted shares in which you should have, please speak up everyone. Gift of quoted shares in which you have 5% holding. Here you are gifting quoted company shares. TWPLC is a quoted company and your holding is less than 1%. Now this means no gift relief. Sir, are these rules written somewhere? Yes. Yes. Go in my summaries handout. This is the life-saving handout. Believe me. This is a life-saving handout which I am giving to you people free. Okay? It's a lifesaver. Where is gift release? CGT, my friend, where is it? Yes, here comes the CGT. And here comes the gift relief. Quoted shares in which donor has 5% holding. Unquoted shares, unincorporated business, transaction immediately chargeable to IHT, and transaction qualifying for agricultural property relief. Okay, so these are the quoted shares, and our holding is less than 1%. So in case of less than 1%, there is no gift relief. Okay, so let's come back to the answer. Everyone, please concentrate. In 2019-20, Corey is UK resident. Therefore, he has to pay normal UK tax on 1920 disposals. In addition to 1920 disposal, Corey also have to pay tax on 1819 transaction as per temporary absence rules. In 1920, you became UK resident, so you have to pay tax on 1920 disposals. You have to pay tax on 1920 disposals, and you also have to pay tax on the 1819 disposal. Okay, you have to pay tax on 1819 disposal also because of temporary absence rules we just discussed. Now, disposal of house in Medora in August 1920. This disposal will be subject to UK tax as Corey is UK resident in 1920. Therefore, worldwide gains will be subject to UK tax. The chargeable gain is 33,900. The chargeable gain is to 33,900. Okay, the chargeable gain is 33,900. Okay. The chargeable gain is 33,900, which will become taxable. Sir, PPR, principal private residence. My friend, it was written in the question that The house was rented out. So when you rent out something for the entire time, you don't get PPR. Here it was written. Please read it carefully. The house has always been rented out. Okay? Karthik, you asked for PPR, no PPR because the house was always rented out. Okay? So, as it is a gain on disposal of house, therefore residential property rates will apply. If you remember, there are higher rates of CGT on residential property, 18 and 28% rates. Okay? Now, as far as gift of 700 shares is concerned, that will be a chargeable transfer. Gift relief is not available on that. 700 shares, each share has a value of 4.5 pounds. So this gave me 3150 pounds market value, which is the disposal proceed, the market value. Now, how will I calculate the cost? If you remember, the cost of shares of TWPLC. If you remember the cost of TW shares, TWPLC, 4,000 shares, the cost allocated to them was 7263. So 7263 divided by 4,000 shares multiplied by 700 shares. So 1721 is the cost allocation and the gain is 1879. Okay. Now, so if I summarize my CGT of 2019 and 20, one is disposal of Medora House and one is the normal gains. Junaid Anwar is asking, sir, what about the letting relief? In PPR, there was a concept of letting relief also. Junaid, let me answer you this question because your confusion gets cleared. The letting relief in PPR was available on lower of three things. The PPR, the 40,000 amount, and the gain attributable to letting relief. Now the problem is that they have always let out this property. This means that PPR, principal private residence amount, is 0. So even if you calculate the letting relief, it will be 0 because letting relief is lower of three things: the PPR, the gain attributable to letting relief, and 40,000. Okay, Junaid? So as they didn't live in the house for any time during the ownership period, therefore no PPR and therefore no letting relief. One student has asked, sir, do we get PPR relief on foreign properties? Yes, we do get. We do get PPR on foreign residential properties also, but only if you have lived there, if there is residence period. Okay, so the residential property gain is 33,900 and normal gains. The takeover transaction gain, which was of 1819, but it is getting taxable in 1920 due to temporary absence issues. And this is the gain on gift of shares. Okay, I will use my annual exemption against residential property gain because residential properties have higher rate of tax. Okay, I will use my annual exemption against residential properties because they have higher rate of tax. So 21,900 and 7642. Okay, the basic rate band is 37,500. Used in income tax. So how did you get this amount? How did you get this amount of used in income tax? It was given in the question. If you go and look at the question, the income was given. That what was the Corey's income? It must be written somewhere. Yes. For part B here it was written, for this part of the work you should assume that Corey is resident in 1920 and will receive taxable income of 38,400 before deduction of his personal allowance. So if his income is 38,400 before personal allowance, and this personal allowance is 12,500. So what will be his taxable income, which will use his band? 38,400 minus 12,500. So 25,900 is his taxable income. Okay, 25,900 is his taxable income, which will use his basic rate band. If you all remember, the basic rate band is first used in income tax, and then the remaining amount is used in CGT. So 25,900 of the band is used in income tax. So 11,600 is available for CGT. Now, first of all, I will use this band for residential property because they have higher rate of tax. On 11,600, the rate of CGT will be 18%. If someone has forgotten, I will remind him that on residential properties, the rates of tax are 18 and 28%. And on the remaining portion of the gain, the rate of tax will be 28%. So total CGT on residential property gain will be 4,972. On the other gains, the rate of tax will be 20% because the normal rate of CGT is 10 and 20%. So as the basic rate band is used up for the residential properties, so the normal gains will be charged at 20%. Okay? Anyone, I welcome your questions. Please feel free to ask. Anyone, if there is any question. Yes. Ask the question or please say that, okay, sir, we have understood. I'm waiting for your replies. No question, sir. No, sir. Clear. Understood. Only 3 students have replied. How come the gain on gift of 700 shares? Okay. One question. Very fast replies are coming. Sir, how come the gain on gift of 700 shares? Harun, please listen to it. He gifted 700 shares to his sister. Listen to it carefully. When you gift shares, you get a chargeable gain. But that chargeable gain can be deferred through gift relief. But gift relief was not available because the shares were quoted. If you look at it here, the gift relief was not available here. Why it was not available? Because he gave 700 shares in TWPLC. Now, Hassan, TWPLC was a quoted company. If you look at it here carefully, this TWPLC was a quoted company and his holding was less than 1%. Now, if your holding is less than 5%, you don't get gift relief. Now, when you don't get gift relief, you have to calculate the chargeable gain. So 700 shares into 4.53150 is the disposal proceed. Now, how did we got this cost? Now, if you remember the paper-to-paper takeover, which we just worked out, on 4,000 shares, the cost allocated was 7,263. So we divided it and we got the cost, and this was the gain 1,879. So this was the gain on gift of shares. Okay, I think Arun, it's clear. Junaid Anwar has asked that, sir, can you please repeat? Junaid, do you want me to repeat this calculation part? So I'm repeating this again. This 33,900 was a gain of residential property portion. and the normal gain related to two things. 5763 was the temporary absence period gain, and 1879 was the gain on the gift of shares. So these are the two gains. Junaid, on residential properties, the rate of tax is 18 and 28. On normal gains, the rate of tax is 10 and 20. So obviously, I will use my annual exemption. Obviously, I will use my annual exemption on residential property gains so that my greater CGT is saved, because there the rate of CGT is higher. So I spent 12,000 exemption on residential property gains. So this is my taxable gain. Then, my friend, we have a basic rate band of 37,500. In the question, it was written that he has incomes of 38,400. He had income of 38,400 before deduction of personal allowance. So 38,400 minus 12,500. So 25,900 is the amount which will use his basic rate band. So 11,600 amount is available for CGT. 11,600 into 18%, first time charging tax on residential property gain. And then on remaining gain, the rate of tax is 20%. On normal gains, the rate of tax will be 20% because they are going for higher rate band. Okay, I hope Junaid, you have got the point. So please share one question answer which can be answered in exact form as per the exam time scenario. Jalal, yes, we can keep the mock paper and we'll discuss this on the last day of the P2P session. Asad Ali has asked her how we will calculate the PPR if the property is situated in overseas, particularly deemed occupation periods. Asad, the rules will be same as for normal UK property. The PPR rules will be exactly same. You will be getting deemed property rules, because if you have went there for employment, full-time employment, then you will get deemed rules. Or for example, if you have went for sole trader business, you can get deemed rule for 4 years. So everything will be same. Okay. Any other question? I think so. Okay. So now we are done with part A. That was determination of residency. We did part A, in which we discussed determination of residency. In part B, we discussed temporary absence rules and some rules of CGT. I hope that you people are also getting your rules revised, because when we do past paper, we are discussing the topics also. And when we do past paper questions, your glitches in the concepts get cleared. Okay. Now, part C is relating to lifetime gifts of painting by Amber. But before moving towards this part C, I would like to take a 10 minutes break because we have been studying for continuous 2 hours, and I think that it is getting some exhaustive. So lifetime gifts of painting by Amber, we will do this part C, but we are going for a 10 minutes break. Don't go anywhere. Go ahead and take up, get yourself fresh up, come back in 10 minutes, okay? Then we'll study 1 more hour, okay? So we'll resume back in 10 minutes. We are going for a break. It's 10:30 on my side. We will resume at 10:40. Wakas is asking, sir, what topics which we need to revise for tomorrow webinar? Wakas, not exactly any specific topic. Just print out my summary notes and try to read them out maximum. They are only 45 pages. Try to read them out. Okay? And rest, I will make you revise the topics when I'll be discussing the paper with you. Okay? Let's come back in 10 minutes. Okay, let's start. Can you people hear me? Please confirm on the chat. Yes, okay. Very good. Let's start our discussion. Okay, so everyone, let's resume. Now, part 3, lifetime gifts of painting by Emmer, and we are given with 6 marks. A very easy part. Let's look at it. A very easy part, 6 marks cash. Okay. What he's asking, lifetime gift of painting by Emmer, 6 marks. Let's go and read it. Now, in part C, he is asking us, explain with respect to the amount of inheritance tax payable only, whether or not it would be beneficial for Emmer to make a lifetime gift for either or both of her paintings as opposed to retaining them until her death. There is no need to address the annual exemption as Emmer makes use of this every year. You should assume that there will be no nil rate band available regardless of when the transfer takes place. So what he's asking, Beta is asking that explain with respect to amount of inheritance tax whether or not it would be beneficial for Emma to make a lifetime gift of either or both of her paintings. Whether he should give the paintings during life or not. We have to discuss it. Okay, let's go and look at the situation which is given. Okay, please, everyone, please concentrate here. You will be able to get it. Okay, let's look at it. Paintings owned by Corey's mother. Corey has asked for advice on the inheritance tax advantages of his mother, Emmer, who is UK domiciled, of making a lifetime gift to Corey of either or both of the following paintings. Okay, watercolor and portrait. The current market value is 41,000. The market value of portrait is 37,000. Anticipated changes that the watercolor value will fall, whereas portrait value will increase. Everyone, I have a question. What are the benefits? What are the benefits? What are the advantages? What are the benefits? What are the advantages of Emmer making lifetime gift of these two paintings, watercolor and portrait? Watercolor and portrait. What are the benefits? What are the advantages? Everyone, please, I want answers from you people. Now, as far as the value of portrait is concerned, its value is increasing. As far as value of portrait is concerned, its value is increasing. So it is better that you make a lifetime gift so that its value get locked at today's value. When you make a lifetime gift, the value gets locked. When you make a lifetime gift, the value gets locked. So due to increasing value, you will get saved. As far as this watercolor is concerned, which has a falling value, you will get fall in value relief. And in case of increasing value, you will have locked value. Another benefit is that if 7 years have passed after making the gift, if 7 years have passed after making the gift, like for example, this Emmer lives for 7 years, then there will be no death tax. At the time of making lifetime gift, there is no tax. And if Emma lives for 7 years, if Emma lives for 7 years, then there will be no death tax. Okay? Now, a very easy and a cash requirement, believe me, a very easy cash requirement. Let's go and read it. Part C. If paintings are gifted by Emma during lifetime, then it will be beneficial from perspective of IHT due to following reasons. Number one, if Emma lives for 7 years at least after making lifetime gift, then no death tax will be payable on gift of paintings. Gift of painting during life will be regarded as potentially exempt transfer, therefore no lifetime tax. If Emma survives for 7 years, if Emma survives for 7 years after making lifetime gift, then there will be no death tax. And even if she do not live for 7 years, then paper relief will be available if Emma lives for at least 3 years. If Emma lives for at least 3 years. Okay. Further, if Emma will make lifetime gifts, then value of paintings will get locked. Will get locked at a value at time of lifetime gifts. Death tax will be payable on that locked value. If value of painting will increase after that date, then death tax will be payable at the locked value. This will be beneficial for Emma in case of portrait, which has an increasing value. Lastly, if the value of asset falls after making lifetime gift, then tax department gives fall in value relief for IST purpose. Due to fall in value relief, death tax will be payable at reduced value if value of asset falls after making lifetime gift. This will be useful for Emma in case of watercolor painting. Very easy 6 marks. Very easy 6 marks. What were the benefits of making a lifetime gift? What were the benefits of making a lifetime gift? Okay, what were the benefits of making lifetime gift? So if you make a lifetime gift, after 7 years, no death tax. If 7 years have not passed, then you get taper relief. The value of asset gets locked, and if the value of asset falls, you get fall in value relief. Okay. Asad Ali has asked her that falling values for insignificant value or significant value. It has no concern with significant or insignificant. Falling value relief is irrespective of it. If the value of asset falls after making a lifetime gift, you get a fall in value relief, and you have to pay IST on the reduced value rather than on the locked value. Okay, Asad? Now, last part, refund of income tax, 5 marks. Last part, ethics, very easy. Again, some easy cash marks are available. In respect of the income tax refund, set out the actions which our firm should take and the matters which should be brought to the Corey's attention. Now, if you read the question, there was some detail given that few months ago, Corey received a refund of income tax from HMRC in respect of the tax year 15-16. He has not been able to determine that why this refund was made. Very easy question. Eat it. Eat it. Very easy. A piece of a cake. They have got a refund and they don't know a reason of it. So what should we do? We should explore the reason. What should we do? We should explore the reason of that refund. And if we are not able to find out any reason, we should return this amount to HMRC. We should return this amount to HMRC. If we don't return it to HMRC and we hide it, if we don't return to HMRC and we hide it, then it will be regarded as money laundering, because we are keeping something which is an illegal receipt, and it will go to money laundering issues. We will try to convince Corey, please return this amount to HMRC. Otherwise, it will be hazardous. And if they don't agree for it, then we can go for a resignation. We can go for a resignation. Now, these were the 5 easiest marks of this paper in which he asked about ethics. Okay, so let's read it. In relation to refund received, in relation to refund received by Corey from HMRC, our firm should investigate the reason for this refund. If reason gets known, then Corey can keep the amount. Otherwise, Corey should inform HMRC about mistaken refund they have sent, and Corey should return that amount. Corey should return this amount as soon as possible and communicate to HMRC about mistaken refund if the refund do not get known. Delays in informing HMRC will lead to interest and penalties. If Corey is not willing to return refund, then our firm should resign from Corey's tax services. As being the tax lawyer, our firm will also face penalty. Firm should inform HMRC that they have discontinued Corey's tax services. Reason should not be communicated initially. Our firm should refer legal opinion that whether they are under regulatory requirement to report HMRC about the wrong refund receipt, because in that matter, we will go for a legal opinion and then we'll take a decision. Okay, so some easy marks relating to ethics. So these are the 35 marks which we did. I have a question from all of you. I want answer from all 85 participants. Have you people understood this question? Have you people understood this question? Have you people understood the rules? Yes, sir. Yes, yes. Understood. Yes, sir. Clearly. Very well. Yes. Yes. Now see, all the messages which I'm getting, they all are saying that yes, we have understood it. Everyone is saying. Now I have one more question from all of you. Now I have one more question from all of you. Have you all completed your preparation till today? Do you think that you were completely prepared before this webinar? No. Now see, everyone is saying that no, sir, we were not completely prepared. Now what I want to say you people here is, now listen it very carefully. What the students do is, listen it very carefully. What the students do is that they waste their entire time in learning the rules. Now, advanced tax has so many rules that if you revise all the rules and you reach the end, you start to feel that you have forgotten the initial ones. I'm repeating it again, and you all will agree with this. In advanced tax, the course is so long. There are so many rules that when you revise all the rules, you feel that, oh, I forgot CGT, I forgot basic income tax, and you go again and you start do revision. Please don't do this. Please don't do this. Do a one-time thorough revision. Many students ask me that, sir, what we should do now? Just print out these summary notes. Print out these summary notes and read them. Print out these summary notes and read them. You have your registers. Any rule where you face difficulty, refer your class registers from whatever tutor you study. I don't care about that, because I know all tutors are good. Everyone teaches right. What you need to do is just read out these summaries. Read out these summary notes. Like for example, if you are reading employment income, you read termination payment, you read share-based payment, you think that, okay, I don't remember detailed rules of termination, go and revise your class register. Once you are done with one thorough revision, what did I say? One. Once you are done with one thorough revision, now leave the register. Leave the register and start doing the past papers. Once you are done with one thorough revision, leave your register and now do the past papers. Believe me, that this is my experience of more than 25 attempts. What is my advice to you people is that don't waste your time in revising the rules again and again. Even if you will revise it 100 times, then also you will forget. And only revising the rules is useless until and unless you will do the past papers. When you do the past papers, you get the understanding that, okay, this is how the examiner asks the rules. You get the right direction. Do the past papers, and while doing the past papers, keep summary notes with yourself. Read the relevant rules. Automatically, the rules will start getting settled down in your mind. At least do past papers 2 times. How many attempts? 10 attempts. How many attempts? 10 attempts. Okay. So should we write the past papers or we should do reading? Now this is a very good advice for you people. What I say to my students, if you wake up in morning at 7 a.m., from 7 a.m. to 12 p.m., write one paper. From 7 a.m. to 12 p.m., write one paper. From 7 a.m. to 12 p.m., what you have to do? You have to write one paper. From 12 p.m. to whatever time you remain wake up. From 12 p.m. to whatever time you remain wake up. Read 3 papers. Now make it your daily schedule. Write one paper in the morning. Write one paper in the morning and read 3 papers. Now, when you write one paper, start from recent ones. And you read 3 papers, start from old ones. Like for example, do March 2020 paper in the morning. And after 12 p.m., what you have to do? You have to do reading of 3 papers. Next day, again write one paper, read 3 papers. Next day, again write one paper, read 3 papers. Repeat this exercise. Repeat this exercise and keep on doing for 5 to 7 days. Believe in 7 days, you will be completed with 10 attempts past papers 2 times. You will be completed with 10 attempts 2 times. Okay? Because you are writing 1 and you are reading 3. So this means 1 plus 3, 4 in 1 day. You are doing 4 in 1 day. And 7 days into 4 means 28. You just need to circulate in 10 attempts. You just need to circulate in 10 attempts. Okay? March 2020, writing in the morning. Then read the whole 3 papers from the last 10 attempts. Like for example, they will be like 2015, 16 papers. Read that. Then next day, again write one paper, read the last ones. Write one, read the last one. Soon you will be written with all 10 and you will be done with reading of all 10. Okay? Sir, the past papers available, the complete past papers available on ACCA website are not the updated ones. My friend, I told you people at the start of the session that on the WhatsApp group, I will share you the updated past papers which I give to my students, and now you all are my students. I'll share you those past papers. Okay, so join the WhatsApp group. The link will be shared again towards the end, and I'll share you the past papers, and I'll share you my solutions also. What I want you all that I want you all to pass. I want a pass grade from all you people, and for that, what you need to do is you have to work hard on past papers a lot. Please don't waste time on just reading the rules. On just reading the rules, don't waste your time. Okay. Now we have some time today, so we can start question number 2 also. Like we'll try to do one part of question 2, or maybe we can read question number 2 because we have some time today, and then we'll continue tomorrow also. Let's start with question number 2. I want you all to concentrate. Okay. Your manager has received a letter from Milta, the owner and managing director of Port Limited. The owner and managing director of Port Limited. Okay. Just a minute. Okay. The owner and managing director of Port Limited, a client of your firm. Extract from that letter together with extract from email from your manager detailing the work you are required to do are set out below. Okay. Now, okay, just 1 second. Anyways, now uh, extract from the letter from Milta dated 2nd March 2020. Okay. Now, sale of 4,000 ordinary shares in Port Limited. On 1st May 2020, I'm going to sell 4,000 shares in Port Limited to my brother Ned. Note from the work you have already done that the current market value of these shares is 260,000 pounds, 260,000 pounds. However, because I am keen to get Ned involved, I have agreed to a price of 200,000. Ned, who is a UK resident, will sign the claim of capital gains tax gift relief in respect of this gift. Now, if you look at carefully, the market value is 260,000. The market value is 260,000. But she will sell it to Ned for 200,000. This means that there is a gift element. This means that there is a gift element of 60,000. This means that there is a gift element of 60,000. The market value is 260. She is selling it to Ned for 200. So there is a gift element of 60,000. Now here it is written that gift relief will be filed in respect of it. Okay. Joint venture Cord Limited. On 1st April 2020, I shall incorporate a new company, Cord Limited. On that day, Cord Limited will register for value-added tax and begin to trade. It will develop a range of products over the next few years. It will develop a range of products over the next few years. The planned ownership of the ordinary share capital of Cord Limited is as follows. Port Limited will own 60%. Mr. Beam or Mr. Beam's company BJB Limited will own 30%, and CX Limited will own 10%. Port Limited, BJB Limited and CX Limited are UK resident companies. Mr. Bean is resident in the UK. Quad Limited financial information. I have calculated Quad Limited budgeted trading loss for the year ending 31st March 2021 to be £44,000. When calculating the loss, I deducted the whole cost attributable to research amounting to 102,000. I also deducted 1,000 in respect of cloak brand as it will be amortized over a period of 35 years. Now this is the note 1 scientific research cost. Equipment and computer hardware 100% relief. Material. Hello everyone. Do you people remember the relief of research and development? Do you people remember the rules relating to research and development? The rules of R&D. If you do spending on research and development, you get additional relief. You get additional relief. Okay. Now, if you go to your summaries and tax rate handout, you can simply go and find the reliefs relating to research and development. The purpose of showing you people this handout is that I want you people to get familiarized with this handout so that tomorrow when you come for the session, you people come by reading this handout maximum. Okay. Now, additional relief may be available on revenue expenses if they are qualifying expenses. Consumables such as material, staff cost, agency staff, utility expenses and software. Additional relief is 130% if a company is a small and medium enterprise. Now, if you go back and read the question, that Quad Limited is there anything written about Quad Limited research and development status? Yes, here it is written in the later part of the question. Quad Limited will be a small enterprise for additional tax relief available on R&D. Now, when a company is small company, your normal relief is 100% and your additional relief is 130%. So your total allowed expense is 230%. Rent 17,400, 100% relief only because rent is not a qualifying expense. On electricity and water, yes, 100 plus 130 because it is a utility expense. On staff cost, yes, you get additional relief. The rent is appropriate allocation of rent payable for Quad Limited premises. All of the staff costs relate to employees of Quad, with the exception of 7,000 paid to external contractor provided by unconnected company. Now, if you read out the summary notes, staff cost is a qualifying expense, but 65% of staff cost will only qualify for additional relief if the staff is outsourced. Now, what you need to understand here is that the staff cost is 29,500. But within this 29,500, 7,000 is of external contractor. So now please listen to it carefully. 29,500 minus 7,000. 29,500 minus 7,000. Multiplied by 100 plus 130. 29,500 minus 7,000 because 7,000 is external staff, which means outsourced staff. Now the rule for outsourced staff is that you will get 100% relief, but additional relief will only be available on 65% portion. I am repeating it again. 29,500 minus 7,000. 29,500 minus 7,000. 100 plus 130. Because on normal staff cost, you get normal and additional relief both. 29,500 minus 7,000. On normal staff cost, you get normal and additional both. But on the outsourced staff, 100% relief is available, but additional relief will only be available on 65% portion. Read it here. Read it here. 65% of staff costs will only qualify for additional relief if outsourced staff. If outsourced staff. If the staff is outsourced, only 65% will qualify for additional relief. Okay? So within this 29,500, 7,000 is outsourced. So on that 7,000 portion, only 65% will qualify for additional. Okay? Now, note to purchase of cloak brand. On 1st April 2020, Cord Limited will purchase the cloak brand for 35,000. Advice will be required on how to develop this brand through the use of social media. It is intended that Cord Limited will purchase this advice from a company based outside the European Union, where the rate of VAT is 9% rather than as the standard rated supply from a VAT registered supplier based in UK. Now we will purchase as advice. Please concentrate. We will purchase an advice from the company which is outside European Union. Basically, we are purchasing service. Advice is a service. Purchase of service. Anyone. If we purchase a service, what are the rules of overseas VAT? When you purchase a service, rules of overseas VAT is that we look at the fact that whether the customer is VAT registered or not. Look at it. Look at it here. I'm going to head of VAT. I'm going to rules of VAT. And within the rules of VAT, I'm looking at issues of overseas. Here are the overseas VAT matters. Read it very carefully, everyone. For services, the rule is that if customer and supplier both are registered for VAT, VAT will be assessed in the customer country. If the customer is not registered for VAT, VAT will be assessed in the supplier country. Now, this is the rule for services. This is the rule for services. Come back to the question. We are purchasing advice. We are purchasing advice. Please listen it very carefully. We are purchasing advice from a company outside the European Union. We are purchasing the advice. Purchasing advice means we are purchasing the service. Who is purchasing the service? Cord Limited is purchasing the service. My friend, please listen it very carefully. We are purchasing the service. We are Cord Limited. We are purchasing the service. And listen it very carefully. Cord Limited will register for VAT and will begin to trade. Now see, if the customer is VAT registered, listen it very carefully. If the customer is VAT registered, VAT will be assessed in the customer country so that he can recover the VAT which he pays. So, as, listen it very carefully, as Quad Limited, is purchasing the service, this means Quad Limited is the customer. Quad Limited is purchasing the service and Quad Limited will be regarded as a customer. So if a customer is registered for VAT, VAT is assessed in the customer country and Quad Limited country is UK. Therefore, the VAT will be assessed in UK. One student has asked us that what will be the implications of Brexit? UK taking an exit from European Union. My friend, this Brexit has not yet been executed. It is proposed to be executed in December 2020. Our course is still unaffected due to this Brexit. Okay, for our course purpose, we will assume that UK is still part of European Union. Okay, Shuja. Acquisition of RIBE Limited. On 1st May 2020, Port Limited will purchase the whole of the share capital of RIBE Limited. For the purpose of UK tax, RIBE Limited is resident in UK. RIBE Limited trades through a permanent establishment in the country of Tirona. RIBE Limited budgeted taxable profit for the year 2021, which relates to its activities in Tirona, is £75,000. RIBE Limited has no other source of income and is not expected to make any chargeable gains. Once we are confident of profitability of permanent establishment in Tirona, it is intended that RIBE Limited will establish permanent establishments in 2 other countries. Let's read further and find out that what the examiner wants from us. Extract from email additional information in respect of Port, Quad and RIBE. Meta owns the whole of the share capital of Port, which is an unquoted company. Meta began trading as an unincorporated business on 1st June 2012. On 1st April 15, when the assets of her business were worth 120,000, she incorporated her business by selling all assets to Port Limited in exchange for 10,000 shares. The sale resulted in gain of 37,400, all of which was relieved by incorporation relief. One more advice for you people: whenever you are reading the question, don't get worried. Because when you read the requirement and when you start solving it, the things get simplified. Obviously, when you read the scattered data, you get worried that, oh, it's a very difficult question. Believe me, this is a very easy question. It is even easier than the question number 1 which we did. Port Limited prepares accounts to 31st March each year. It does not own assets other than those which are used in trade. Quad Limited will be small enterprise for additional relief of R&D. I have already established that research to be carried out by Quad Limited will qualify for this relief. Quad Limited will not surrender any part of the relief in any part of the loss in return for refund from HMRC. RIBE Limited has not made election to exempt profits of overseas permanent establishment. The rate of corporation tax in Tirona is 14%. Other than that, the tax system in Tirona is same as UK. There is no double tax treaty. Okay, and now then we have the requirements part A, part B and part C. 25 marks requirements. Okay, I'm stopping my today's discussion here because we don't have much time that we will be able to solve it today. Now, what I expect from you people for tomorrow. I'm stopping my today's discussion here. We will have a discussion tomorrow. We have continuous 5-day session Today was the first day from it. Okay. What I want from you people, please listen. Before coming to tomorrow's class, I want you all to take a printout of these summary notes. These are attached in the handout section. If someone has not downloaded it yet, please go and download it. I want you to take a printout of these summary notes and read them as much as possible. Read these summary notes as much as possible. Okay, my friend Akil, it is available in handout portion. There is no need to email it. You can simply click on the handout and it will download it in your computer. Okay. Yes, someone has asked, are these summary notes complete? Yes, they include all rules. They are complete, they are comprehensive, and they are best for your revision. Okay. And the second thing which I want from you all is that I want you all to read the question one again on your own. Read the question one again on your own. Okay. So that you will get more clarity. And try to read question number 2 also before coming to the next class, so that we don't have to waste our time in reading the question 2 again. I have briefed you some points while reading the question, but when I will make you go through the answer, you will get more clarity. Okay, this is an easy question, it's not a difficult one, so don't worry about it. Okay, done. Okay, some students have asked some question. So can you share question and answer of last attempt? My friend, this is the most recent past paper available, which is of March 2020. Okay, so we are not available with the September exam papers. So I try to go through the most recent 3-4 papers in the session, and for rest of the papers, I will share you the files on the WhatsApp group. Okay. So I think Shehzad, I have answered your query. Okay, Shehzad, you are asking for last 10 attempts. Shehzad, I have told it multiple times that I will share the remaining papers on the WhatsApp group. Still, we have 4 more days to go for the session. Once we complete these sessions, I will share the remaining papers on the WhatsApp group, which you can practice on your own. Okay. Anyone else, do we get this highlighted handout you are writing on as well? Samila, if you want this handout, the highlighted one, you can WhatsApp me your email address on private message or on the group, so I will email you this file also. Okay, but if you want this one file, this one which with my annotation, so you can have it that also. But for that, you have to give me your email ID separately. I'll share it. Okay. So let's wind up our session for today. Hope that today's session was productive and you all have enjoyed it. Okay. I hope that you all have understood it. Okay. We will continue tomorrow, same time, 3 hours again. We will do question 2, 3 tomorrow again. And I want you all to make out most of these sessions. Try to learn the approach that how you have to prepare yourself. Okay. If anyone has missed any part of the session, you will have the recordings on ACCA channel of Vimeo. Vimeo channel of ACCA. You will have the recordings there. You can even search it on Google. So they will get uploaded after within 24 hours. So if due to any connectivity issue you have missed anything, you can refer there also. Okay. Thank you everyone and take good care. Okay.